Silver just hit an all-time high. But here's the truth. It's not because of the usual suspects, electric vehicles, solar panels, or any other industrial demand. In fact, what's really pushing silver's price through the roof has nothing to do with supply or demand at all. This isn't about the green energy transition. It's about something far more unexpected, a looming financial shock that could change the game entirely. And if you're not paying attention, it could leave you unprepared. This isn't speculation. It's happening right now. Stick with me for the next few minutes, and I'll show you why silver's price is soaring, what's really behind it, and why this could reshape how you think about your portfolio for the next few weeks. You've been told silver is soaring because of industrial demand. Electric vehicles need it, solar panels need it, and while that's partially true, it doesn't explain the 4.45% jump in just a few hours. No, something bigger is at play, and it's far from what you're hearing on the news. What if the real reason silver is climbing is tied to something most investors are overlooking? The silver market is reacting to a potential Supreme Court decision, a ruling that could send shockwaves through the entire U.S. economy, forcing the government to cough up over $200 billion. That's right, $200 billion. But the kicker? It's not just about the money. It's about the timing and the pressure that's about to hit the markets. Why does this matter? Because when the government faces a massive unplanned debt obligation like this, the consequences ripple through every asset class. And right now, silver is the only asset that's truly benefiting from this storm. Let's break this down. The Supreme Court case at the heart of this could lead to a $200 billion refund. Yes, a refund. This isn't some far-off hypothetical. This could happen soon, and it could hit the U.S. Treasury hard. Here's how it works. Between 2017 and 2020, tariffs were imposed on hundreds of billions of dollars worth of imports, mostly from China, but also from Europe. Now, the legal challenge is arguing that these tariffs were unconstitutional. If the Supreme Court agrees, the government has to refund every single penny paid by importers with interest. You're probably thinking, so what? Well, the price tag for this. Between $180 billion and $220 billion, let's stick with $200 billion. And here's the kicker. This isn't just a paper loss for the government. This isn't like some budget item that can be spread out over years. This is an immediate demand for cash, and that's where silver comes in. Now, let's look at how this could escalate. The Supreme Court ruling might not just be a one-time shock. It could set off a chain reaction that fundamentally alters how investors view U.S. debt and the dollar. And here's why that matters. If the government has to issue $200 billion in new debt to cover this obligation, they're going to have to raise money fast. But here's the problem. We're not in a normal environment. The bond market isn't as stable as it used to be. Yields have been climbing, and foreign governments, they've been pulling back on buying U.S. debt. The market's already showing signs of stress. This is where things get dicey. If the Treasury floods the market with an extra $200 billion in bonds, yields are going to skyrocket. And if yields spike too high, the Federal Reserve will have to step in and print the money to cover it. And guess what happens when they do that? The dollar gets crushed. This isn't a drill. This is the fiscal shock everyone's been ignoring. And smart investors are already acting on it. They're moving out of the dollar and into hard assets like silver. And right now, silver's the one getting hit hardest. Here's where things take a darker turn. The signs are already here. Just look at the numbers. Silver isn't rising because of industrial demand. It's moving because of financial flows. Money is fleeing the dollar and fast. The silver market just saw a 4.45% spike in a single morning. That's not how industrial demand works. Industrial buyers don't panic buy silver at all-time highs. They plan their purchases, lock in prices with contracts. They don't jump in when prices are already through the roof. But here's the real kicker. In Shanghai, the price of silver was over $98 per ounce. That's an 11% premium over the $88 price in New York. And this isn't just a coincidence. It's a huge red flag. When you see price discrepancies like this, $10 between markets, there's only one thing happening. Silver is being pulled out of Western vaults and shipped east. Fast. That's a serious stress indicator. If this keeps up, we're looking at a disconnect between paper silver prices and physical silver that could send prices through the roof. The situation is escalating, and the signs are everywhere. First, we have the massive premium between New York and Shanghai. Then we've got silver skyrocketing and the bond market on the edge. Now, here's what happens if this continues. In the next few days, we could see hundreds of millions of dollars worth of silver moving out of Western vaults. The London vaults alone hold around 1 billion ounces of silver, but that won't last long if this keeps up. And if the market starts to suspect that those vaults are running low on deliverable silver, we're in dangerous territory. That's when the paper market decouples from reality. The exchange might step in and say, sorry, we can't deliver at these prices. That's when the real price of silver isn't what the market says anymore. It's whatever someone is willing to pay to get their hands on the physical metal. And that's when things get really messy. Now let's take a step back. You might be thinking, what does all this mean for me? Here's the truth. When markets like this get volatile, it's not just the rich and powerful who feel it, it's everyone. You might not think a $200 billion fiscal shock affects you, but it does. It hits the value of your dollar, it raises the cost of borrowing, and it puts pressure on your savings. This could affect everything, from your investments to the price of everyday goods. If the dollar starts to lose credibility, it doesn't just hurt the big players, it impacts the money in your wallet. And it's happening fast. If you're sitting on cash right now, you're already losing. The question is, are you positioned for what's coming? Because if you wait too long to react, you could find yourself holding the bag when the dust settles. If this feels familiar, say so in the comments. Let's step beyond the panic and look at what's really happening under the surface. Why is this crisis unfolding in the first place? The truth is, it's all about leverage. The way governments, corporations, and even individuals are stretching their resources to the limit, betting that everything will keep going smoothly. But when a massive financial obligation like this $200 billion refund hits the system, the cracks start to show. It's like a pressure cooker that's been on the verge of exploding for years. The entire system is built on the assumption that governments can just keep borrowing and printing money without facing real consequences. But that assumption is cracking. Here's the unsettling part. This isn't just about a $200 billion debt. It's about the mechanism that allows the system to keep running. The fact that the market keeps buying U.S. debt and holding dollars even when the value is at risk. As investors start to lose faith, they'll shift their money into hard assets like silver, anything that can't be inflated away. And that's where we are right now, the moment when people start asking the hard questions. And it's already happening. So where does this all lead? Right now, there are two possible paths. The first path is the slow, drawn-out scenario. The government manages to stretch things out. The Supreme Court decision gets delayed and the market goes through a period of uncertainty. Silver could pull back and for a time, everything seems like business as usual. But make no mistake, this is just the calm before the storm. The second path, a fast, brutal shock. If the Supreme Court rules quickly and the Treasury has to act fast, that $200 billion demand for cash will trigger immediate action. Yields will spike. The Fed might step in and start printing money. And that's when the real panic starts, when confidence in the dollar begins to erode. Silver is already reacting to the first signs. It's up 4.45% in a matter of hours, and the gap between New York and Shanghai prices is widening. The real question is, how long can the dollar hold up before the floodgates open? The next few days are crucial. We're on the edge, and whether this is a brief blip or the start of a much bigger crisis is still to be seen. Here's the bottom line. This isn't just a story about silver. It's a story about the entire financial system, about how fragile it really is when pushed to the edge. A $200 billion shock doesn't just affect the Treasury. It affects everyone. It forces a shift, and smart money is already moving into hard assets like silver, anticipating what's coming next. The thing is, you don't need to wait for the market to catch up with reality. The warning signs are already here. Silver's price isn't going up because of industrial demand. It's responding to a deeper financial crisis that's just beginning to unfold. And here's the real question. Are you positioned for what comes next? Are you ready for a scenario where the dollar starts losing credibility and hard assets become the only thing that matters? This is happening now. The clock is ticking. So take a hard look at your strategy, pay attention to the signals, and don't wait for the mainstream media to catch up with what's already unfolding in the markets. If you want more insights like this and to keep ahead of the curve, make sure you're subscribed. The next wave is coming, and you don't want to be left behind.